Welcome to 2-Minute Analysis. Our goal is to not only entertain, but provide value and insights about the investments you care about. Today's episode is from this request. So let's throw 2 minutes on the clock and dive in. Today, we are looking at Zoetis Incorporated, ticker symbol ZTS. Kicking things off here with the quant rating system, it is currently a hold rating on the stock, and we're going to dive through some metrics here in just a moment. Jumping over to the Seeking Alpha analysts, they currently have a hold in aggregate on the stock, and that's from 5 analysts providing coverage in the last 90 days. Lastly, Wall Street is a buy on the stock, and that's from 20 analysts providing coverage in the last 90 days. To learn more about how the Seeking Alpha Quant system and the Seeking Alpha analysts outperform the market, visit the link in the description of this video. So let's dive deeper. This is a $54.92 billion market capitalization company found within the healthcare sector and the pharmaceuticals industry. Kicking things off with the valuation is currently a D- grade, and we're going to look at the enterprise valued EBITDA here, currently at 14.65 compared to the sector at 12.71, kind of feeling in line there. But if we look at that PEG non-GAAP forward, that is 2.58 compared to the sector at 1.76. Most would consider that a bit of overvaluation. The growth grade is currently a D-. Year-over-year revenue growth of 2.68% is below the sector median at 6.38%. Also want to highlight that this is below the 5-year average of 8.06% for this company. Profitability is currently an A+ grade. Net income margin of 28.21% dramatically beats the sector of only about half of a full percentage point here. Nice profitability for Zoetis. Momentum is a D+ grade. 1-year price performance is down 25.07% compared to the sector, which is mainly flat. Not a good thing to see there. Lastly, revisions is a D+ with 3 up revisions and 12 down revisions for earnings per share over the last 3 months, and 1 up revision and 14 down revisions for revenue over the last 3 months. Now, this is a dividend-paying stock. It pays a yield of 1.70%, and the 5-year growth rate is 20.11%. Looking at the safety grade, it is an A. The growth grade is an A+. The yield is a C, and consistency is a B-. Jumping into consistency, they've been paying their dividend for 12 years here. Looking at dividend safety, looks like the cash flow is going to keep this dividend pretty stable. $2.92 billion of cash from operations here for Zoetis. So go ahead and follow Zoetis here on Seeking Alpha to get free breaking news alerts. The link is found beneath this video. And that's going to wrap it up for this episode. If you have a ticker you want us to cover, add it to the comment section below. And don't forget to follow Seeking Alpha so you get notified when the next 2-minute analysis gets published.
Past performance is no guarantee of future results. Content provided for informational purposes only. Seeking Alpha does not offer any personalized investment advice and is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.